Hi there, I'm Mike Hamilton at The Kind Advisor on Twitter. I'm a fourth generation financial advisor from Hamilton Insurance and Financial Management. I'm based out of Waterloo, Ontario, Canada. So if you're not within Ontario, you can watch this video and get some good advice. However, I do recommend that you go seek a financial professional in your province or your area and talk to them before you put any of this advice into practice. If you are in Ontario and you find this video about mortgage insurance interesting and you'd like to book a meeting with me for some more questions, to answer some more questions, feel free to go on my website, www.hifm.ca, and you can click on the book a meeting button and we'll get to you as soon as we can. As I mentioned, I'm a fourth generation advisor, and I found this pretty interesting. I work with my dad, and my dad gave me this painting for my office, and the painting's actually done by my great-grandfather, who was the first financial advisor in the 4 generations, and so I think that's really cool to have in my office. I'm really happy about it, and I think I'll try to keep that forever. So, so I wanted to talk to you a little bit about mortgage insurance, and you may have heard some things about the mortgage life insurance that's offered when you go to buy your mortgage versus life insurance like term insurance or permanent insurance that you can buy through someone like me. There are some differences, and it's good to get an understanding of it, because you may end up in a terrible situation where your life insurance doesn't actually pay out because of a mistake that you might have made on that insurance application. So I just want to tell you a little bit about my experience buying a house, my very first house. My wife and I, we bought our first house at the age of 23. We were really young. We didn't really know a whole lot. We were trusting our mortgage agent and trusting our real estate agent to get us the best house and to give us the best advice when coming towards that type of thing. And it was okay. I think we were in the dark about a few things, and it's hard because when you deal with a mortgage agent or a real estate agent, you take them at, you trust them a little bit more because you were probably referred to them from somebody else, and that's all good, but I think they don't really have the best understanding of how the mortgage insurance works. They do understand a little bit. They'll tell you a little bit about the fact that you should buy actual life insurance, but a mortgage agent has to sell it. They're actually, by law, they have to offer it, so they're going to have to talk about it eventually. The problem I have with this insurance is when I was going through my mortgage, I was looking at the insurance application, and the guy left it with me because I wasn't sure, and I was already in the life insurance industry, so I really wanted to have a look at it. And I was going through it, and it was just 5 questions, 5 really easy questions to answer. And the gist of the questions was basically like, have you had this, or 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 any other injury or illness. So what I feel about that is very, it goes from very specific to very vague. And when you do that in a long type sentence or a long question, you kind of get bored as you go through it. So you're like, oh yeah, well, I don't have any of the super complicated stuff, and I don't have any of that uncomplicated stuff. But I did have an injury or illness, but I answered no to this question because I didn't feel like that injury or illness that I had, way back when I was 6. Maybe I had asthma. I was diagnosed with asthma, or I was having stomach issues, or any hockey injuries. You end up lying on it because you don't feel like those are relevant because they're not complex things like the questions asking previously. And I feel like that vague question can get you into a bit of trouble, and it has gotten people into trouble. So that's why it's really good to kind of look at regular life insurance versus the mortgage life insurance. The problem with the mortgage life insurance is when you go through that application, you get approved. But they don't do any medical background checks of you or anything like that. So you're approved, you're paying for it, and you could go 10 years. Let's say I went 10 years and all of a sudden I died, but they found out that I had been to the doctor for some other illness that I didn't even think about. I had stomach problems and I didn't really understand what they were. Nothing was really figured out, but that I went to the doctor. I had it on record that I was at the doctor talking to them about stomach pain or whatever it was, and if I was using the mortgage insurance, I might have forgotten about that, and if they're looking at it post my death, they would be able to go back and say, well, you talked to the doctor and you had this thing and you said no on the application, so that's misrepresentation, so I could deny the claim. Whereas if you were to buy regular life insurance, which I did, my wife and I bought about $300,000 because our house was just a little bit less than $300,000 of term 20 insurance, and then added a little bit of critical illness insurance on top of that. But we did that because we knew that it was going to be guaranteed up front. We went through the life insurance application process, and when you do that, the questions are a lot more specific. They do end vague, but I do ask, the questions about whether, there's anything else really that you've ever had in your whole life. I want to know about it because I want to put it on the application, because when they do the underwriting up front like that, they go through your whole medical history, they have a look. If they see anything, they go talk to your doctor, and then they'll approve you after all of that. There's like 20 or 30 medical questions, and they're very, very specific versus the 5 general questions that I found on the mortgage application. The reason they do this is so that when you do die, which it's 100% guaranteed that we're all going to die eventually, when you do die, the benefit, the insurance amount, is guaranteed to pay out. And that's why you buy insurance. You want to ensure that your family's going to have money, and if you're paying for it, you want to know that you're actually going to get it. Okay, and that's the problem with the mortgage life insurance. You don't really understand that, or you don't really know you're going to get paid out. There's no guarantees with it at all because it's underwritten after the fact. So that's something you really should think about when dealing with mortgage insurance, and when you're buying your first house or second house or whatnot. I'm not going to go into all the details about why life insurance is better than mortgage insurance coverage. It is, but you can check it out on my website, www.hifm.ca/insurance/mortgage-insurance, and you can get as much information as you can possibly want about the 2 types of insurance there, and it'll give you a really good idea of why it's really good to have actual life insurance. And if you do want a quote, you can just go on my website and click request a quote, and we'll get a quote to you right away. So if you are a first-time buyer, I do recommend you talk to somebody that you trust, for the mortgage, and also for the just real estate advice. So if you are in the Kitchener-Waterloo area and you don't have a real estate agent or you don't have a mortgage agent, please send me a message, because I have a lot of contacts that I know and trust, and I know that they do a great job for you, and so let me know and I'll get them fired off to you. Okay, thanks a lot, and have a great one, and go Rangers!